let's move on to our third story. This is a great story. This woman is Fahmi Quadir. She was a short seller who bet against Valeant when it was at its top in 2015. That's how she gained her name. She's been out on her own since January. And one of her shorts is, shocker, can you guess it? Tesla. It just sort of adds to that 26% of its shares are outstanding for shorts and for selling. I mean, it's crazy.
Well, so here's the thing. This story actually works really well with another story by Molly Smith of Bloomberg News that came out this morning talking about how Tesla has 143 days before the really big debt bills start coming due. And this is the real issue, right? I mean, Tesla's been facing a lot of problems for a while, but the sort of metal hasn't whatever the phrase is. You know,
metal hasn't met the road.
Thank you very much. You know, we haven't really had.
Is that skidding?
We haven't seen them really face some sort of credit pressure. In 143 days, they're going to start to see their debt come due, including a convertible bond of $900 million. They're going to have to pay back. It's going to be $1.5 billion over the next 13 months that they're going to have to repay.
And in recent years, the theory's been credit is so loose, anybody can borrow money.
Right.
Elon Musk is going to test that.
Yes.
He's going to say, okay, will you lend it to me after all the problems we're having, all my tweets and everything, the SEC?
Well, right now, the market is valuing their debt with an 8% yield, right? And that's pretty much in tandem with other CCC rated companies. But that's a hefty bill, and it's going up. And if you look at the credit default swap market, the perceived risk of this company has increased dramatically. So the chances of them having to pay a pretty hefty premium in order to borrow more money, and what would they have to actually give in order to entice those investors is a little concerning to some.
And the question sort of is, where would they get it? So the equity raise, okay, there's some collateralized debt potentially, but also if you did another sale of convertible bonds potentially, because there is one that's coming due that you can transfer at 360. Will that be like the next tweet? No, I can go private at 360.
Well, so that's what one theory is more convertible debt. But there's also a theory that they're going to have to offer some kind of secured assets in order to entice investors. But what would that do to the other bonds? It would absolutely annihilate them because they'd be removing the assets from any recoveries that they could potentially receive down the line. So a lot of concerns there for Tesla.
This is totally right. At the same time, it is a car company. At some point, it comes back to, can they make the cars and make money off the cars? And if they generate the Model 3s and they can actually turn it cash positive, these things will take care of themselves.
And as we learned, the answer looks to be we're closer to yes than no.
Yes, exactly right.
So,
a lot better people thought.
But if they're a car company, based on the fact that Ford is now trading below $9 for the first time in 7 years, should their valuation be a little different than what it is right now?
Entirely possible. At the same time, Ford doesn't have a Tesla plan, and that's part of the reason why they're trading below $9.
Yes, but you know, anyway.
All right,
to be continued.